Hello, everybody. Brian here from quantlabs.net. Just going to go over my detailed performance on this bot. It's fairly new, so please be kind. You always will have wonky reports. Oh, I hate to hear myself. Okay, let's get it this way. Okay, so what I'm going to show you is everything you'd want to know about this trading performance bot. As it stands right now, I am suspending all my marketing. I can do a separate video on that. But right now, I just want to get everybody that's signed up in the last few days onto my get them up and running and stuff. So working on that. What else do we have? Alrighty, gotta get my screen up there. All right, share screen. Alrighty. So first, let's talk about Bitcoin and what's been going on with Bitcoin. It's a mixed story, but I'm going to show you what I've done with a lot of my reports and whatnot. So let's talk about it. Okay, so is my screen being shared? Hang on here. Yeah, it is. Okay, let's talk about Bitcoin. So what I'm going to show you is the futures bot on Binance.com, not Binance US, and make sure that we understand where we're going with this. So first, Bitcoin has pretty well fully recovered to almost $60,000. You can just see the trend that's been going on for the last little while since September. There is momentum in the market, but I'm going to explain that in a minute. Ethereum has pretty well fully recovered as well, which is good. And then I should show you Bitcoin Cash as well. That's the odd trade for that will be. So this is going to show you the volume of what's traded and what over the last week with this new bot. So here we have Bitcoin Cash. I mean, this is not performing at all. It's not recovered like with what you see with Ethereum and Bitcoin. Let's look at Litecoin as well. And then there's the odd trade that you might get with Litecoin as well. So here's Litecoin, not as good as either Ethereum or Bitcoin, obviously. So let me first show you what everyone wants is the performance of the overall futures bot. So this is it here. Okay, a couple of notes here. This is started, today's the 31st. So as I said, it's been running for 10, 11, 12 days. Not very much. Thanks for whoever's liking out there. And it's done well. They dropped back down and then came back up. So I've stressed this enough, and this is really important. You see here on the 28th, 29th, 30th, a drop, okay? And then you see this recovery on my performance on the overall P&L here. Now, there are ways to either minimize this or even maybe eliminate these losses. I'm gonna talk about that in my video later on. But you can see it's now back to where it was on the 27th. So a couple things here to note. This is including if you were to get, let's say, a signal, assuming you get a signal on the Bitcoin USDT, it's going to trade the full value of Bitcoin. Okay, that's why you're going from 250 to 2250. It's because of that. So if I was to sit here and trade only Bitcoin, full value with Bitcoin, you would have gotten back, a couple of grand already. So let's go over what we call a term sheet. These are the typical returns, professional looking that you would get from as if you're looking at a financial advisor. So here's what we got. We have our summary. Our Sharpe ratio is quite high. It claims to be up to 426 total return, Sharpe ratio of 505. I mean, remember, it's early days. The the compounded annual growth rate is just off the chart, supposedly. There's going to be no real detailed monthly returns because it hasn't been running for a full even 2 weeks. So a lot of the early stages of these bots won't show full reports, but you get here all your typical statistics, whatever. And here you get a 428% return over that period, which again is somewhat unrealistic, but it doesn't seem to be all that bad. But here's what I don't like. This right here, the maximum drawdown. Now, if you're a person that is wanting to run bots, get performance, you should be asking for this stuff. And I will tell you, where you stay away. First of all, if you're not getting these reports, wherever you're going is just utter garbage. Okay. Because you should be able to get full access to this. And what you're looking for are your drawdowns. So here's the worst day in drawdowns, 70%, which when you look at that chart looks realistic. But what needs to be understood is you need to really watch this, because you, like any professional, should not have more than a 15% drawdown. So here it's at 70%, which is pretty excessive. So what we need to do is to eliminate that. And that comes back to the chart here. So can we control these losses? Yeah, we can. First way to do it is to set a target. I'm going to show you that in the positions in detail, and be able to say, okay, we achieve a certain percentage, be it be a full percent, be it be maybe 0.75% or 2%. Okay, we don't know, but you need to figure out what the average is for the day and for the week, because guess what? The markets change. Okay, so we are getting momentum, but it's now getting choppy. We're not getting the momentum that we had from like solid upward momentum from, let's say, on Bitcoin, November 16th to about, let's say, January 6th or farther in, the 30th. And then, you get a pullback, then it goes back up to the 60,000, and then you get these pullbacks along the way. Okay, you're not going, if you're going to try to trade just Bitcoin alone, you will over long run be able to achieve profit, but the problem is, are these pullbacks are eating into your profit. So if you set daily targets along here, you're able to preserve your portfolio by not trading, because it's just an additional risk. You only want to trade when the markets allow you to trade, as such, from, as I said here, mid-November till around here sometime in January or even February. So this is what a lot of these professionals don't do. They get tied into particular pairs, instruments, and if you talk to me one-on-one, I don't really care about coins. I only care about explosive moving coins. So we cannot operate this way. So let's go into the overall performance here. So what I did was, I've been promising to do this, and this is today. What I have now is I have 2-level reports. I have a complete condensed summary of the overall P&L for the day that the particular coins give me. So in this case today, on March 31st, because it's now April 1st, a couple hours into it, we can see here a couple of things. We have total P&L, total trade, number of trades made for that day, number of wins based upon that win ratio, and the return overall. So what we really care about is the overall P&L. Okay, the return is equivalent of return on your investment, but the P&L is really what's going to drive it. Now, a couple of big notes to take away from this condensed one is we are averaging 50% win ratio for Bitcoin, 45% for Ethereum, and a 42% win ratio with Litecoin. The other thing to factor in is the number of trades made during that day. So today, so 77 for both Bitcoin and Ethereum. You'll see it a little different with yesterday's data, and a little few trades with Litecoin. And there's a couple of things we can say about the split here and the number of trades. Is you look at the charts. The chart says it all. If you look at Ethereum, it's a solid move up for the day, and there's been some good momentum for the last few days with Ethereum. Okay, so if I move it over to Bitcoin, it's the same pattern. Pretty well, I would say that between Bitcoin and Ethereum, the pattern's somewhat similar. The only difference is what we got to look for are the magnitude of each pullback. As you can see here, the pullbacks are a little deeper than Bitcoin. Okay, so if you were to draw a magnet, like some kind of quantitative way to measure these pullbacks, which one's safer to be in the long run, as well as how long does it take for, once you pull back, how long does it take for the price to recover after the pullback and then start to retain your profit. So along here, similar in the overall performance of the chart, we need to minimize the things that we have control over. If I set daily targets, okay, I'm going to wait out this daily target. I'll be able to reduce the number of trades and then reduce the number of losses on those trades, as well as increase and boost the number of wins, which will obviously increase the returns and overall the P&L on average, and all the chart will look better and the Sharpe ratio thing will look better. Okay, so these are the sort of things you would expect on an early day bot. Okay, but what we need to do is just to have it exponentially grow. Now we do have to factor in these pullbacks are fairly new. If you follow me along when I did the Kraken bot futures, it was just 16 grand to $2 million in 4 months. As I said, you can just see it right in the charts. Okay, start around here or here, sometime in November 11th, right here. And when you look at that performance, okay, up until January, a little pullback, but we were still able to achieve that $2 million overall P&L and growth in the so-called portfolio because of that run up. And I was also controlling the losses because I didn't have the daily target. I didn't implement a daily target. And I want to talk about another way to control the losses as well. So along here, we're only trading 4 coins. Okay, so that's today, this report. Now, if I was to show you the other overall summary of how things did, this is yesterday. One thing I want you to pay attention to here between today and yesterday is now we have Bitcoin. We have 6 positions for Bitcoin Cash. If I look at the chart here on Bitcoin Cash, how did that look? It's a bit of a movement here, but you can see that downward bar there. Okay, so that's why now Bitcoin's added in there, but it's the same percentage. Oh, actually, let me just pull up the other. Okay, so when you look between the two, you'll see a vast difference in the number of Bitcoin positions taken versus Ethereum, Litecoin, and Bitcoin. In this case, Bitcoin somehow outperformed Ethereum and Litecoin because of the number of positions taken. And that's usually driven by other algorithms that are driving up the price and driving on the number of positions taken versus Ethereum and Litecoin and somewhat Bitcoin Cash. So when you go over to CoinMarketCap and you ask yourself, why is the market cap so much bigger with Bitcoin? It's because of most people are only trading Bitcoin. Like you can see here, what, 75%, maybe 70, like a good chunk of those trades yesterday were all in Bitcoin because it maybe outperformed. I don't know. One thing I want other people to realize are these win ratios. Okay. So here for this day, you can see here, I've got a 59% win ratio with Litecoin. So does that mean I should trade less Bitcoin because I'm only getting 51%, or maybe put a little bit more into Litecoin? So you can average all this out over a couple of weeks, a couple of months. And the thing is that what will happen is it's, as I said, it's always random. That's just the way the market is. So the overall P&L here, you can see what's driving most of the profit is Bitcoin. Okay, 226, 51 positions. That's okay. But as I said before, if I did set profit 1% and then stop the trading, I probably most likely will get more wins, better return, and higher profit. So that's one of the things you want to do. So let's look at in detail some of the positions taken. So let me look at today, how it played out. Now I could go through this to my heart's content, okay? And then here, so this is for today, earlier today, 31st of March. Okay, so a couple of things here we can also look at. We can look at weighted average. Now remember what the weighted average is factoring in the top 13 coins on Bitcoin, or sorry, on Binance, how they're performing overall with Bitcoin, with the crypto space on Binance. Where's the momentum at that particular hour of time? So this is one other way to defend your performance is maybe only trade when the market, when the weighted average is a certain level. Usually let's say 0.25% among the, in my case, the top 13 coins. Okay, so again, that's another metric to reduce the risk. And as you can see here, you know, we started out fairly negative, and then it started to just suddenly go positive, or I'm sorry, it started to get less negative, then it started to get positive right here, 0.67, weakened again, and then it went negative, went positive. So there's a lot of oscillation between positive and negative. And look right here, 2.9, so now it's gotten really strong towards 250. So the 2.9, and then it dropped back 2.1 to 1.7. Now, there's a couple of things you can take away from this on the weighted average. Now, these are hourly moves among the top 13 coins. When you look at the overall ROI for that position, the P&L, you would think that because you have a higher momentum, that your profit should be there. So that's one thing you can analyze on your performance with a bot. But here, along through here, is kind of like where you want to trade, 2.9, 2.1, even 1.7. But when you look at the ROI, you'd hope to see more profit on each position. Okay, so let me just give you a lesson here. So right here, in this range from 0.73 on the weighted average, moving up now to 2.9, and you track that, you can see here, you're getting more profitable positions. And it's still mostly profit. So if you were to follow that logic, you would just follow only trade when you hit a certain metric in the top X of the weighted average. And then you boost your profit just by doing that alone. Another thing that we need to factor in is when you look at your total ROI, this is now your daily profit. Okay, so again, this is today. Look what happens to the overall ROI for today. See, we're starting out strong. Okay, starting out really strong. You know, we're at 0.89%, 0.91. Okay, so this is really important to understand as well, is to figure out when your peak is of your total ROI for the day. So now you can see it's starting to drop from 0.91 to 0.85, 82, 81, 78, 0.66, boosts up again, but luckily it's boosting back up to 0.93, but this is now at 2:36 in the morning. So this is just in the first like 2.5 hours, okay, of the day. And we're going to these extremes, okay? But if we continue along with our overall total ROI, look at starting to drop at 0.68, 0.64, 0.67, but we were already up at 0.93%. So look at this, look how low it gets to, 0.14%. So if we cut the trading at 240, when we hit the 0.991, so if we cut the trading right here, chances are we would not have, started to lower our total ROI for the day. And now look, it goes all negative. Oh my God, it's all negative. So now and look where it ends up. So you were up at 0.9%, okay? And all of a sudden it dropped now down to negative 1/3, okay? So if you had stopped trading here, okay, at 240, 250, you would have retained all that profit. You would have not taken those losses. A couple of advantages here when you do that is A, you're not over trading and you're not going to pay out for those commissions on those losing positions. So we're not factoring in commission here. This chart will be even a lot worse looking, right? So if we had cut the trades at 250 when we hit 0.93, we would have retained that and we wouldn't see these dips in this overall equity curve. Okay, that's so critical. And you have to ask yourself, you're going negative. Look at the losses here in the weighted average. We were at 2.1, 2.9% among the top three. And then there's this big drop that came in and just reduced the overall weighted average moves of those coins. You're going negative, and then it goes down to negative 0.47, and it really goes negative to 5.1, negative 4.59, and so on. We should have stopped trading at that point. Should have stopped trading, and we would be still up nearly 1% for the day. But instead, we hang on to the trades. Now we're down negative 0.36. This is why I'm saying that daily targets are really, really critical. It comes down to somewhat an intelligent risk management and cut the trades. A lot of you I have talked to now over the last week or two, a lot of you are going to trade as a human, okay? You're not allowing automation, okay? Without this metric here, you don't know if you're trading in a negative market. So no matter what you trade, there's a very high probability you'll lose. Okay, I'm not trying to sit here and come down on people, but it's just a lack of knowledge. This is why you got to have automation in your overall call it intelligence when it comes to trading crypto. And it's the same thing for overall with other asset classes. Forex to get a weighted average on all the major, the overall major different pairs. They all, most of them in Forex trade independently from each other. If you look at the overall performance of the stock market, you got 4 major U.S. indices. Some are up, some are down, and not everything moves in the same direction. So right now, one thing I like about crypto is I have this capability to do this and get these hourly weighted averages. And then also, you can easily do this through a platform on your ROI. But what I'm talking about here is really critical if you don't want to see these down moves on. And this could be your overall portfolio, okay? Which in this case for this bot it is. And because I'm not properly watching these metrics here, the weighted average, the ROI for the day, you know, you're gonna get slammed. And I've done the spot bot, and when I say slam, you'll see it in the spot bot when I do it. Okay, so really important that people understand this. So, what are some of the other ways to defend your negative trades? Okay, so one way to do it is we have our weighted average here, right? We have our weighted average on the overall crypto space among top 13 coins, okay? And that's the overall high level movement of crypto, okay? So if you want to avoid trading in a falling knife environment, you have this metric at all times. And again, as I said, this is a way to moving average of all 13 coins over that hour, okay? So knowing if you have that, you know when to go fishing, because that's what it kind of is. And you know when to trade, okay? So there's all these things I've talked about in this video that help you out. So now that this video exists, and if people start asking me about this or that, I'm starting to ignore people when I'm already posting videos on those specific topics. So people will reach out to me via commenting or whatever. If you don't hear a response from me, I'm only going to say this once in this video. Even though I'm ranting here, I can't respond, okay? I won't respond, okay? And unfortunately, you either watch all the videos I put out and stay current on it, or you know, you'll go somewhere else and get scammed. I should do a separate video on that. Okay, but lessons learned, okay? Breaking down of this futures bot for Bitcoin, Ethereum, and anyways, let me just show you the last move here of this spreadsheet here. So this is yesterday, Sunday, the 30th. Okay, so we have the same metrics, weighted average, and the total ROI. So this one's a little more consistent. So you can see here, we start out at really, really good levels, 0.93. Now, one thing I will say about this bot, it has usually been at 0.5%, but it on Thursday, Friday, it was getting around 2%, or sorry, 1%. And then Saturday and Sunday, it started hitting 2%. So here, when you look at here, this column, the ROI, you can see it. Same kind of story, but doesn't go negative, okay? Where, you know, you're starting at 0.93%, and then look at what happens. You start to drop to 0.5%, and then you hope that it comes back, and it kind of does, up to 0.6, up to 7, and it ends at 0.77% up. But if you were smart and set up some kind of target, you could have probably hit here 0.96, pretty close to 1%, and not taking these extra risky trades. Overall, you're winning Well, it doesn't matter what you're trading here. It doesn't really matter. What we're looking at is the total ROI. But overall, if you stop trading here, like within 5 minutes, you would have been up pretty close to 1% again. And you had to go through all these trades, let it drop, and we're already at 200. Okay, factor in the trades and the commission you're paying for each of these trades, win or lose on each one. Okay, because we're not factoring in commission. Okay, so you kind of want to reduce your trading to reduce the risk if the market overall goes against you, and importantly, you don't want to pay that extra commission. Okay. So very, very, very important. So I'm going to put out another video with an analysis on the spot bot. That one's doing okay, but as you can see here, as we all know, people look for the overall Sharpe ratio. So it's only 10 days. It's way too early. Sharpe here at 5. That's way too early. But I'll show you the other bot. I think it's a little higher, but it's way more volatile. Okay. So I'm going to go through that. I'm going to set that up. And I'll come back live for that analysis as well. Because thanks for the other like. I'm going to make sure that this isn't fully out there, but I'm not going to talk about this anymore. So if you miss out or whatever, sorry. That's all I can tell you. Leave it at that. Thanks for watching. As I said, usually ended off with some marketing pitching stuff, but not today. Quite a few people overload on the support end, so I'm going to come back with a better solution, simpler as well. Talk to some of my current folks on it, and they seem to be aboard with it. Okay, we'll talk to you later. Thanks for watching.